Hello, everyone. Welcome to Accounting for Beginners. I'm so glad to be here today to teach you a very wonderful topic. Today, talking about debit and credits. I know that most accounting students get very confused with this topic. Where do I debit? Where do I credit? Let me tell you something. You're not alone. Most accounting students struggle greatly with this particular terminology, with this principle. And that is why I'm here today. I'll be showing you in very simple and practical steps how you will know what to debit and what to credit without cramming. Da-da-da-da-da-da. Smooth criminal. Hi, welcome. My name is Ngozi. I teach accounting, make it very simple, practical, and fun. Now, so you're talking about a very important topic, debit and credit. And I want to assure you that this is the only video that will break this down in very simple terms that you don't have to cram any single thing because you will understand it. The reason why accounting students find this topic very, very difficult, and even other administrative students that have accounting as maybe there are other courses, they find it difficult because they cram it. Accounting doesn't need to be crammed. You have to do what understand it. So you get here. You have to do what understand it. And so I'll be breaking this down very easily for you so they can easily understand this topic. And whenever they ask you this question, if you come a few way, give them the answer. Sharp, sharp, without thinking. So I'm here. I got you to solve this mystery for you. Let's do a small dance. Igwe, igwe, ji, igwe, igwe, ji, igwe, ji, igwe. Alright, let's get back to the class. Just for us to have a little bit of fun. Now, like I said, my name is Accounting. And today we're talking about debit and credit. So let's jump right to the class. Did I just have a cup of water or coffee or ice cream or popcorn, whatever suits you, just to flow with the class? And I promise you, by the time I'm done with this class, you understand accounting. This topic, debit and credit, be like gum in your hands. I give you that assurance. You will not be confused, but rather be convinced on how to debit and how to credit. I got you. I got you. Now, let me tell you a story. My boyfriend told me he's going to give me 100,000 naira. Ah, as I mentioned that sum, my head grew bigger. I said, wow, this boy loves me so much. What am I going to buy? A new dress, a new pair of shoes, make my hair, begin to greet you with more love. Say, hi, darling. How are you doing? How was your day? Make his favorite meals. Now, this is the effect of 100,000 naira, my boyfriend. And what's the effect of 100,000 naira to the boyfriend? His bank balance has reduced by what? 100,000 naira. So, debit and credit is all about consequences and action. When a transaction occurs in accounting, there is a consequence, there's an effect of that transaction on two accounts. One account to be debited, one account to be credited. And before I jump into debit and credit, let me simply say what debit and credit means. Now, in accounting, we have what is called ledger account. That's not the topic for today, but because I want us to understand this, I want to just paint that scenario for you because I got you. So now in accounting, There is a ledger account that is being prepared. When I say account, for lack of space on my board, I'm going to use here to draw what an account looks like. So account simply means a T shape. Alright, this is what an account looks like. Something like a letter T. The debit side is called what? Debit. So the left hand side is called debit, and the right hand side is called what? Credit. This is an account. So anytime you hear the word debit your account, credit your account, they're simply saying write the transaction on either the left side for debiting the account or the right side for crediting the account. This is what an account looks like. Ledger account, normal account. It should have more content, but I'm trying to make it a very summarized form. Just two sides, debit and credit. Debit is the left hand side. This is your debit. This is your credit side, right hand side. That's what an account looks like. There are more details, like I said, you're going to have the date, particulars, folio, amount, but just to know what an account looks like, just for easy understanding. We talk about accounts in more details, and I've also taught what accounts is in my previous topics. Check my YouTube videos. You will see how an account looks like. But just for us to flow with the class, I have to do this brief introduction of what an account looks like. Okay, so now, like I was saying, debit and credit. These are the effects of a transaction. Once a transaction occurs in a business, two accounts are being affected. One account to be debited, the other account to be credited. You now understand what debit and credit mean, meaning the left hand side and the right hand side of different accounts. Are we together? And now, transaction are things that occur. When I say transaction, I mean what happens in the business. For instance, a customer comes to buy goods worth 10,000 naira on credit. That is a transaction. Anything that happens in the business that has to do with the customer either buying something or the person selling, giving goods, either the goods are sold on credit or on cash, as long as there's an exchange of goods and money exchange hands, or you say, oh boy, I'll pay you later, that is a transaction. Are we together? So anything in this area that happens in the business, you notice your stock was there, you have sold five, a transaction has occurred. Are we together? You receive money into your bank account as a result of the sales you have made. A transaction has done what occurred. So that's what transaction means. Business activity involving either selling your products or buying more products into your business, or giving cash, or paying for rent for the business, or paying salary for the, as long as it has to do with the business and money is exchanging hands or goods are exchanging hands, that is a transaction. Now once there are transactions in business, there will be an effect, there will be a consequence, and two accounts will bear the consequence. Just say my boyfriend said he will give me 100,000 naira. The consequence of that 100,000 is that me, the girlfriend, is excited. I say, hey, I'm going to get myself a new pair of shoes, a very sexy clothes. And I begin to be with more, hi, darling, hi, baby. Now, this is the effect of the 100,000 naira he has given to me. On the other side, his account has done what? Reduced by what? 100,000 naira. So there are consequences, and then there are accounts that are being affected. Just like the way what you sow is what you reap. The same thing in business. Everything you do has a consequence. Let's give us that background story to understand that in accounting, for you to debit and credit will be first of all a transaction. Now, this transaction will lead to a consequence, will lead to an effect. And who will be affected? Accounts will be affected. How many accounts will be affected? Two accounts in most cases will be affected. One account will be debited, one account will be what? Credited. At all times, you cannot have debit and debit. No, you cannot have two accounts being debited or two accounts being credited. No. One account will be debited, the other will be what? Credited. That is how it is in accounting. It's a two-way street. Are we together? So now, let us give us a typical life scenario. But before I jump into it, I want us to do a short recap on how to know which account to debit, which account to credit. I've talked about types of accounts, and I thought that's in my previous class. you've not watched that video, I want to urge you to please watch that video so that you can understand what to debit and what to credit. So I'm giving us a recap to make this very, very easy because I got you. I got you. I got you. Okay. Now, on the recap, I thought about types of account. We have three types of accounts. In everything account, there are three types of accounts: nominal account, personal account, real account. You understand? Now, nominal account is anything that's to do with expenses or sales or income. Once you hear sales or you paid for rent, you paid salary, you have to incur expense for the business. For you to run the business is what an expense. That has to do with what nominal account. Now, there's a rule for every type of account. Now, for the nominal account, that has to do with your expenses like salary, you pay rent, you buy this, you buy that. As long as it's things you're buying to enable you run your daily activity in the business, those are under what? Expenses. So once you have an expense, you're going to do what? Debit the expense account. And when I say debit, I mean you're going to write the transaction, you're going to record that transaction on the left hand side of that expense account. Are we together? So let's say for instance you paid rent 10,000 naira. By virtue of this, you know that what the nominal account is part of this account because you had rent. And rent is what? Is an expense. It's an expense for the business. If you don't pay rent, how can you do your business? You need to pay your rent. So my brother, you can't pay your rent. So now by virtue of this expense, I know that I'm going to open my rent account or look at expense account. And then another account that's been affected is what your cash account. Now cash account falls under your what? Real account. No, your personal account. Are we together? Cash account fall under your what? Personal account. I'm giving all this news so I can understand it properly because I thought about this before, but I want us to be able to link this together. Let it make sense. Are we together? So now I said when you have things like your cash account, you don't know what's your personal account because cash belongs to a person. Are we together? So that's why it's under personal account. Other things that belong under your personal account is your bank, supplier, and customer. That is when your customer comes to buy things from you on credit. We call them what? Debtors. Then you also have creditors. When your supplier gives you goods on credit, it's called what? Creditor. It's a person that is giving you these things on credit. And that's why they fall under what? Personal account because there are human beings involved in it. So be it in the case of debtor, whereby a customer comes to buy things from you on credit, or in the case of creditor, where you, the owner of the business, go to your supplier and say, oh boy, I need goods worth 10 million naira, but I don't have the cash now. I'll pay you later. That person you have approached to give you goods and you don't want to tell him is your creditor. Are we together? Falls under what? Personal account because it's a person. So these are the classes that fall under your personal account: your cash, bank, creditor, and debtor. So using the scenario I gave, you paid rent for cash or in cash. Now you rent, you're going to open what? Two accounts. By virtue of this transaction, you know that two accounts will be affected. One, your nominal account. Second is your real, so your personal account. And under your personal account, you're going to have what? Your cash account. That's the one that will be affected. Particularly, and under your nominal account, you're going to have what? Your expense. Now, the law for nominal account, I'm trying to make this make sense. Let it connect. That is why I'm trying to explain it in this manner. Now, for nominal account, whenever you have your expenses, you're going to do what? Debit that transaction. You're going to record it on the right, on the left hand side. Akekpe, ndị Igbo. On the left hand side of your T account. Are we together? While whenever you have income, going to go on your credit side of your income account or credit side of your sales account because when there's a sale, you're going to have what? Income, most likely. That is when, if, well, I don't want to bore you with all the story, but the important thing to know that whenever you have your debits, whenever you have your expense, you're going to debit your expense account. Whenever you have your income or your sales, you're going to credit the income account or the sales account, as the case may be. So that is the law for nominal account. Every account has a law guiding it. What do you debit? What do you credit? What do you debit? What do you credit? Debit is your left hand side, credit is your right hand side. Got it? Now, for personal accounts, the law. Every account has a law. And for the personal account, whether it's your cash, bank, debtor, creditor, whenever you are receiving, you're going to debit that what personal account. And when you are giving, you're going to credit the personal account. So in the scenario where we said you paid rent for cash, now cash is given money. So I'm going to do what? Credit my what? Cash account. Why? Because whenever you are receiving, you debit your personal account. And whenever you're giving, you credit your personal account. Now in this case, you are giving cash. So you're going to credit your what? Cash account. Am I making sense? If I am, stick with me. All right. Now, so we can now solve this question one, having known the law guiding the normal account and the personal account. Now, we said paid rent in cash. So I'm going to open what? Two accounts. Whenever you're given a transaction, you ask yourself, which account am I going to open? That's the first thing you should ask yourself. The next thing you ask yourself is, which account will I debit? Which account will I credit? If you're able to answer these two questions, you're going to be able to post correctly. You're able to transfer, you're able to record properly. That's what I mean by posting. You're able to do what? Record properly in the right part of the account. You understand? Because if you record wrong, it's going to affect everything you do. And that is why this topic is critical. Very, very, very important. Okay, let me continue. Let me continue. Let me continue. So like I was saying now, for this particular question, we're going to open with our rent account and our cash account. So permit me to clean this up. Let us solve our question properly. Question one. So and then I'm going to open two accounts. You can know that rent has to do with expense. So I now have my rent account. So let's just say rent account. And I have my cash account. AC means what? Account for sure. I'm going to do what? Debit my rent account and credit my cash account. I've solved this question. That is because rent was an expense. The law says you debit your expense and you credit the giver. Cash account is a personal account. Get what I'm saying? Get what I'm saying? All right. Now we are told we have three types of account: nominal, real, and personal account. Now for the real account, it has to do with things like assets, properties, share, furniture, land, things you buy with the intention to use them for a very long time, more than a year. They fall under your assets, they fall under your real account. Are we together? Rent is paid for 12 million expense. You don't have rent, you cannot do your business most time. But expense are the cost you incur so you can run your business on a daily basis. But assets are things that belong to the business for more than 12 months. Once you have anything that's going to last more than 12 months and it belongs to the business, is an asset. It falls under what? Real account. So what are assets? I just explain what assets are. Resources that belong to the company and have a lifetime of what? More than 12 months. You buy a land, this lasts a very long time. You have a building, you have a furniture, you have your chairs, all those things are for your business, but you're not buying them because you want to sell them. You're buying them because you want to use it for a very long time for your business. So they fall under what's your assets. Are we together? Now there's a law for every account, like I said earlier on, and the law for your assets slash real account is that what you debit what comes in and you credit what goes out. So anything that is coming in, maybe you're buying more furniture, you're buying more chairs, you're buying more laptop, you just buy, and it's coming in, coming in. It's not good though. You are going to what? You debit your asset. But if you're now selling, let's say the chair at Fuka, you repair this several times, it's not getting better. You want to now sell the share. So it's going out, you're going to do what? Credit.